We have portfolio equity peaks as well as drawdown alerts. So I want to go over this now. The 50 key portfolio has been efficient this month. It's up 27.4250. Took a nice trade yesterday, taking us to brand new equity peaks in this portfolio setup. So you see that zero line. The current drawdown is at 0, and you see brand new equity peak. So very consistent. Solid year. We had a down January. December, January were tough, but every month so far. And this is intra-month in August. So brand new equity peaks. In these portfolios, we like to wait for a 3 to 5K drawdown on the 50K and about a 5 to 8K drawdown on the 200K. So this had a drawdown alert back in this time frame. This week it's rallied to new equity peaks, and you see where that when the zero line has a lot of solid blue, that means it's pegging the zero line, pegging new equity peaks. So, and then this is the equity curve, and this is the monthly result. And let's look at the rest of the portfolios. The 200K portfolio is right here at around a 67, 65 drawdown, down 1632.50 on the month as of August the 12th, end of the day. And this is a drawdown alert in the drawdown alert category for this 5 to 8K range. You can see right here, drawdown alert. We had a drawdown alert here, it rallied, did make new equity peaks, came back to the drawdown alert in this time frame right here. So let me get the pin out and show you where the 5 to 8K range is. Hard to draw a straight line here, but it's right in here. 5 to 8K is right in there. You can see the frequency of those drawdowns. So it can be a good time to get in to buffer technical errors and worst case drawdowns that may exist. Sometimes you have a worst case drawdown, and then the market will, then the portfolio will bounce right back, kind of like stop runs. You want to buffer those by starting on a drawdown. So this is the point. All Strategy Access 78 recently had a brand new largest winning day, and we've had massive chop, down 25,000 in this portfolio. This is a big portfolio. I would recommend using about $500,000 to trade this portfolio. So you're comfortable with these larger drawdowns. You need an amount of capital that is comfortable, where 54,000 or a new worst case drawdown in the future does not affect your ability to stay with the strategy. You can see this portfolio had lots of volatility in Q4, and then it bounced. See, this was the worst case drawdown, then it made a new worst case drawdown. And now it's just kind of, we've had not huge losing days, but it's been choppy. So let's take a look at the pattern here. You see July the 20th, brand new, largest winning day, 36,000, then four more winning days, and then since July the 27th, we've had just choppy trading. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trading days, and only 2 winning days out of those 13. And so that is a choppy time period right now. We've experienced this. We saw this in recent months, where the beginning of the month is really choppy. So if you take a look at July, minus 5,000, then plus 11,000. That was a big day, but fairly choppy. Beginning of the month is fairly choppy. So if you highlight this through July the 19th, it's minus 7,000. So you're down 7,000 on the month through July the 19th. So most of your month is spent. You do have a nice winning day on July the 9th, 22,000 on July the 9th, 11,000 on July the 2nd. So down, but as of the 19th, you're coming into towards the better, the end of the month, the second half of the month, and you're still down on the month. And then you get this winning streak, and then you give some back, and then we give some back at the end of the month. And so we're kind of experiencing this scenario in a lot of portfolios where I've seen where you start here, your equity is here, and then you get to the middle of the month and you're down on the month, and then you have this run in equity, and then you give some back at the end. So the gain is there, but it kind of looks like this. The equity curve has been looking like this lately. And my theory over the years has always been the markets can trend the best and have more tone to them, tradable at the beginning of the month. So I'm used to seeing beginning of the month and then give some back and then end of the month. And so it's kind of the inverse of that now. Beginning of the month, middle of the month, end of the month. And so oftentimes you see that in markets too. Markets would trend, classical trend pattern in the markets would trend at the beginning of the day. Markets trend, goes sideways to down, counter trend, and then rally at the end of the day. Same for shorts. So now, oftentimes we'll see a mean reversion of that. Beginning of the day, chop, rally or sell off, and then chop at the end of the day. So market patterns and portfolio patterns, they tend to mean revert and are inverse from what you may have seen in the past. So we're in that now, and so we're seeing that drawdown choppy. No, we don't have any huge losing days in a portfolio like this. If you look at these are not big losing days for this type of portfolio. It's just all the markets just have no tone. They're just all over the place, random, and hard to trade. So that is where we are in the All 78, the biggest portfolio that trades the most strategies, and it just shows you how well some of these other more selective portfolios like 200K and 50K. 50K is at equity peaks. 200K is just in a $6,700 or $6,800 drawdown. What we said earlier, and so minus 33.50 on all strategy excess 51. Now the all 78 includes a lot of momentum strategies. Definitely not a momentum kind of a month right now. Minus 9,500 on the all strategy excess 51 plus 7. The 7 new includes some momentum strategies such as the VSD stock index portfolio 27. This is in a $14,000 drawdown. So these are all in drawdown alerts to trade, to start trading, except for the 50K, which is at an equity peak. So we've gone over the 200K, 50K, micro portfolio aggressive. This one is in a $2,200 drawdown. So down only $1,521 on the month. And it's had a nice run here, up nice on the year. And that's the aggressive 37 portfolio, and then the conservative one, which is the 200K portfolio, micros with the gold, crude oil, E-mini S&P and E-mini NASDAQ, minus 204 on the month, 97.47 on the year, $730 drawdown. So that is the update portfolio calculator through Thursday, August 12th, and where we are in the drawdown cycles and equity peak cycles.